Okay, guys. Hi, everyone. Welcome back to day 3 of our business financial boot camp for beauty industry professionals. Once again, I want to thank you guys for taking the time out of your Monday evening to join me. I really do appreciate it. So I'm not going to waste any time. I'm going to jump in because I want to try to make sure I respect your time and that we wrap this up within the hour or sooner than that, so I can leave some time for questions. Because we may have questions, especially if any of you are currently using QuickBooks Online. You may have some questions, or if any of you are trying to decide which QuickBooks Online to choose for your business, or if you're trying to decide whether or not QuickBooks Online or QuickBooks Self-Employed is best for you, you may have some questions. So let me go ahead and queue up the slides. Okay, so once again, my name is, well, let's not start there. I don't know why I always want to start there. But anyway, welcome to Beauty Business Financial Bootcamp Part 3. This is Part 3. And next week, Monday I think next Monday is let's see, what's that date? It is the 14th. We're going to have our 4th and final boot camp. And I really hope that each one, 2, and hopefully 3, somehow helps you in your business, even if it doesn't help you to get to exactly where you're trying to go. I'm hoping that it at least helps you to start the process of taking those small steps to get to where you're trying to eventually get to, because it's one step at a time. I've learned that. All right, so once again, I always ask this question. I think that we got cheated when we went to cosmetology school because we learned nothing about business. And really, when I think about it, it's not just cosmetology school. Even in universities, they don't teach entrepreneurship. And I don't know whether it's because they just don't teach it or because the preference is that when people graduate from college, the preference is that they go work for a company. If I don't know if schools are pushing employees versus pushing entrepreneurship. Now, things may be changing now because in 2022, a lot of people are more hip to the idea of working for themselves. But in addition to colleges not teaching entrepreneurship, of course, we didn't get anything when we went to beauty school either. We got nothing, and therefore, when we graduated, we didn't really know or understand what the basic requirements of entrepreneurship was. We just got thrown out there with our skills, and that was it. We knew nothing about starting a business. So if you decided to become a booth renter or a suite renter or even a salon owner, you really didn't know some of the basic things that you needed to know to get started. So what I'm trying to do is to bridge that gap between what we did not learn in cosmetology school and what we need to know as business owners. Okay, so today we are going to be covering beauty business bookkeeping. We're going to be talking about why maintaining your books matters. I know it's something that there's nothing sexy about it. You guys are here today, which is great. If I was putting on, because I actually used to be an educator for Farouk Systems, I used to teach cut and color. My classes were always full. Whenever I was teaching a class, I always had a lot of attendees. Now, when I offer to teach a class, I get people come in, but barely, because people aren't really interested in learning this stuff. You know, it's not, they figure, well, I didn't really start a business to learn how to do bookkeeping or learn how to understand, you know, the business behind the business. But this is very important because without this, your actual business, what you actually love to do, you know, is not going to grow at all. You're just going to stay right there. And if you're okay staying right there, you don't want any growth, you're okay just being exactly where you are, that's fine too. But if you're looking to somehow grow your business or to meet certain goals, not even just grow your business, but to try to plan for retirement, okay, planning to purchase a home, planning to send your kids to college, you know, just things in life that we want to do. In order for you to do those things, you have to, you know, manage your finances well. And your finances all start with whatever it is you do for a living, however you bring in money, your earned income, whether it is from a business, like in your case, or whether it is from you having a regular 9-to-5 job and being an employee. All right, we're going to talk about using a spreadsheet to track your income and expenses. So I do have a spreadsheet that I created that I am going to show you. It's pretty simple, and it does give you some, it gives you some insight into your business numbers. And I'm going to show you that spreadsheet and of course share it with you if you're interested. I will give you the link so you can go ahead and access that spreadsheet. Then we're going to talk about using QuickBooks Online for your bookkeeping. And also we're going to compare it to self-employed, because I get a lot of questions, people asking me, should I use QuickBooks Self-Employed or should I use QuickBooks Online? Which one is best for me and my business? And I always say it depends. And I'll talk to you about QuickBooks Self-Employed and why I don't necessarily love it when it comes to using it as your bookkeeping system. Of course, it's better than nothing, but there are some disadvantages with QuickBooks Self-Employed that we're going to talk about. All right, so without further ado, let's get into a few slides and then we are going to jump into actual looking at the demos. All right, so once again, I am a former hairstylist and salon owner for over 20 years, turned certified public accountant. So as a stylist, I worked as a booth renter, I was a salon suite renter, I was a W-2 employee, I was an independent contractor. Like I said earlier, I was an educator for Farouk Systems, makers of Silk Therapy and Chi, of course. And as a result, I am very, very familiar with the beauty industry because I was behind the scenes. I shouldn't say behind the scenes. I was in the actual, I was actually doing the work for about 20 something years, owning a salon and doing hair and doing all of that. So I truly understand that side of the business. And now as an accountant, I work with beauty industry pros from the financial and tax and bookkeeping side. And because I have the experience from the operation side or the operating side, that allows me to really help my clients. And I truly understand what they're going through. I understand how things work because I was there at one point as well. So now I help beauty pros build confidence and clarity around their business finances. So that's basically, in a nutshell, what I do. Okay, so why maintaining your books is important, why it matters. Okay, so there's several reasons why it matters. Now, what I find is that people usually only care about getting their books together at tax time. So they do nothing all year round. And as soon as tax time rolls around, they try to figure out, okay, well, I need to somehow get my information to my tax preparer or to my accountant so they can do my taxes. So what usually happens in that case, they pull out their 12-month bank statements and credit card statements and start going through it, trying to figure out whether or not something is business, whether it's personal, or whether or not, even if it's just business, even if they have a business bank account and a credit card that they use strictly for business, what they're now doing is they're trying to figure out, okay, well, what was this purchase for? Now, remember, we're in right now we're in March. This is March 2022. So if I'm doing your taxes for 2021, you're now looking at transactions from over a year ago, January, February, March, April, trying to figure out what exactly it is that you purchased. You have no idea. And usually when I'm working with a client, if you don't know what you purchased and there is no way for us to find out if the bank or the credit card company did not leave a descriptive enough description that will tell us what this was. For example, sometimes it will say salon centric. Off the top, we know it's products, right? The only difference is we don't know whether or not it's cost of service products or whether or not it is just regular supplies for the salon, because cost of service would be color. It would be things like not foil, but color and shampoo, conditioner, cost of service. If you are also maintaining not just your expenses, but you want to also maintain what it's costing you to put on a service. You wouldn't know that if you don't keep your books, even though it came from Salon Centric, you can't break it down into what's what. Okay, but if there's no descriptive description, then, and you can't tell me what it is, then automatically it becomes a personal draw to you, which means that you just lost out on an expense. So I always say, looking up into the ceiling, trying to answer a question, when I say to you, well, what was this for? I always say the answer's not up there, but I say it as a joke. But anyway, yeah, so it's important that you think about maintaining your books, not just for tax season, not just for tax season time. Okay, so budgeting and projecting. If you maintain your books, it's easier for you to create a budget and also to create projections. So a budget is something that I honestly, love, or I should say, a budget really does help me progress in my business, because when I have a budget and I see exactly what it is that I'm budgeting for, it's a lot easier for me to take, to use my funds. And, or rather, if, for example, let's say let's use projection for an example. Okay, budgeting and projecting, which sort of go hand in hand. Now, when I say budget, so you're saying this is what I think I'm going to spend, and this is what I think I'm going to make this month. When you project, you say, this is what I would like to. These are my projections based upon whatever you're basing it upon. These are my projections. And I love to look at my actual and my budgeted and my actual side by side, because it tells me that, okay, here was my budget, here's what actually happened. And when I am working through the month, I always go back to look at my budget and my projections to see if I'm on track. If I am not on track, then I start asking myself, what do I need to do to get on track? Because if I'm trying to make $20,000 this month and I'm currently at 9,000, and it is, say, March 12th or whatever day it is, how do I get to that 20,000 between March 12th and March 31st? Then you start to put forth effort to do things, to make things, to make it happen. But when you don't have a budget, you have no projection in your head, you're saying, okay, here's what I want to make, but there's nothing, you're not putting anything down on paper, then you don't really put forth the effort to try to meet that goal, because it's not written down. The importance of writing things down, honestly, it's almost like, if I don't write something down, I know that I want it, but it's in my head and that's it. When I write it down, I always aim for it. I always aim for what I have in writing. And that's the reason why I think it's important to have your budgets and projections. It's just like having a checklist. With a checklist, I always get everything done. Without a checklist, I know what I want to do, but at the same time, I may or may not do it. But when I'm looking at my checklist, I start to mark things off and I get things done. Estimated taxes. All right, so it's important. It's required by law that we pay estimated taxes. If you don't maintain your books, you'll never know how much you're supposed to be paying or putting aside for estimated taxes, which means at the end of the month, or rather at the end of the year at tax time, you're once again going to be left with this huge tax bill because you didn't really plan. You didn't plan, you weren't paying your estimated taxes. So now if your taxes are, say, $20,000, it's a lot harder to come up with $20,000 than it is to come up with, let's say, $5,000 every quarter to make sure you're meeting your estimated tax obligations. And then, of course, peace of mind. If your books are intact, you're not wondering whether or not you have enough money to meet payroll. You're not wondering if you have enough money to purchase product. You're not wondering if you have enough money to do whatever it is you're trying to do, whether it's business or personal, because you can see what's going on. You can just hit a button, look at your numbers, see what's going on, and make plans to meet whatever goal or whatever target you have. But when you don't have that information, you don't know what's going on. So you're always worrying and wondering if you have enough money. And then we have the next thing is assessing your goals, your targets. So if you have goals, if you have a target, you can assess your goals and you can assess your target if you have numbers. If you're looking at your numbers, you're looking at your books, you're saying, okay, well, here's what I did, what I'm doing, or what I did in January. Here's what I did in February. Here's what is going on in March. And this is what my actual goal is. Am I hitting my target? Well, you don't know that if you have no books. Okay. So that's why it's important, or some of the reasons why it's important to make sure that you maintain a bookkeeping system. And there are others, but I don't want to go too deep into them. All right. So that's it for the slides. Now I want to jump into some demos, and I want to talk about, first of all, the first thing that I'm going to be sharing with you is the profit and loss statement, Excel spreadsheet, show you how that works. So let me share my screen with you. If I can figure out how to, let's see. Show slide navigator. Okay, hopefully if I click this, I won't do something wrong. Oops, oh, there you go. All right, so now I can share my screen. Let's see, screen share. Okay, so type 2 in the chat box if you can see my screen. I'll just wait. That way, I just want to make sure. Okay, good. Okay, you guys can see it. Great. All right, so this is a profit and loss, a very simplified profit and loss statement that I created for people who are either starting out and are not ready to purchase a software, QuickBooks Online or whatever software you may decide to purchase. You're not quite ready to purchase software, but you do need something to maintain your books. You want to be able to track your income and your expenses. So this spreadsheet, basically, I created, now what I did, I used all of the transaction, when I say transactions, or let me say categories. So I created categories within the spreadsheet. Categories are basically what you see. So advertising is a category. Promotions is a category. Paper and printing is a category. Bank fees is a category. Whenever I say category, that's what I'm talking about. So it has 12 tabs, January through December, okay? And then also it has a year to date. So here's how the year to date works. So let's say, so currently we're in March. So at this point, you should have January, February, and March, some of March should have been completed. So if you want to look at your profit and loss statement for the month of January, you want to see how did I do in January, what happened in January within my business, you can just go straight to January's tab and you can look at all of the transactions. And I'll explain to you how all of this works. You can go straight to January and look at your net profit. Or if you just want to look at your transactions to see how much you paid in certain expenses, or how much income you made, retail, online, regular retail, or booth rental income, or service sales, whatever the case may be, whatever you're looking for, you can actually go to each month. Now, let's say that we are in the month of March, and it's time for you to prepare your quarterly estimated taxes. So in order for you to do that, you would need to know what your net income was for the first quarter, right? So then that's where you will go to where it says year-to-date statement. So year-to-date means everything from January up until today. You will find that on the year-to-date statement tab. So let's say we have January, February, March have gone by. You want to see what your net income is for January, February, and March. That way you can start to calculate your estimated taxes. You will come to the year-to-date statement, and then you will pull your number from the net profits. That's where you're going to start when it comes to calculating your estimated taxes, right? And then let's say that you want to look at, let's say we're in the month of March still, but you want to sort of compare January, February, and March to see how did I do each month. I want to just look at one sheet, something that is transparent, that can tell me how I did within those 3 months. I have the consolidated statement here, where with a consolidated statement, you can actually see each month. Now, all of these, everything that's on the consolidated statement and the year to date, you don't have to plug any numbers in here. Everything rolls into these sheets automatically. So if you're looking at January, February, and March, you can come here and say, okay, so for the month of January, I had service sales of this amount. In February, it was 4,000. In March, it was 5,000. And then how much you made in retail sales, how much you made in online sales, all of it will tell you right here on the consolidated sheet. Okay. And also you can look at, let's see, let's go down. So it's all the way through December, and then you have your totals. Now, let's go back to January, and let me explain to you how the percentage of income works. All right, so let's say that you want to know what your, let's say, total cost of goods sold. right? So cost of goods sold would be things like retail purchases. Retail purchases would be if you sell retail products, so shampoo, conditioner, whatever you sell within the salon, then that will be considered retail purchases. Then your back bar and professional purchases would be things like your shampoo that you use for on your clients, your conditioner, your color, your relaxer, your, anything that you use to actually do the job. And then you have your commissions paid, whoever you're paying in commissions, whether it be employees that you're paying, whether it be your assistant, whoever you're paying. And then you have your merchant account fees. Merchant account fees are things like square fees, Stripe, whoever you use for merchant fees. Now, up here, when it comes to cost of goods sold, if you have an assistant, not an assistant, if you have a receptionist in the salon, the receptionist is not part of cost of goods sold. That will be part of an expenses. Cost of goods sold is only whatever you have to pay to put on a service. So in other words, your receptionist, whether or not you have a single client in the salon, your receptionist is always going to be there to answer the phones and to do whatever it is that you require her to do. On the other hand, when you are paying employees or if you're paying your assistant, if you don't have any clients come in, then your employees or your assistants aren't going to get paid, especially if they're on commission. So the purpose of your employees under cost of goods sold or your assistants under cost of goods sold, they directly help you when it comes to working on clients. Okay, so that's why what you pay them is considered cost of goods sold, because you're paying them to help you directly work on your clients. So if you want to find out what percentage of cost of goods sold was to total income, then this is where the percentage of income comes in. So if you're trying to figure out how much you spent on something, am I spending too much on back bar products? Am I paying my employees too much? Am I paying too much on merchant account fees? Okay, is it costing me too much? Do I need to go find a different merchant because I'm realizing that a certain percentage of what I bring in is going to merchant account fees, and that percentage for my industry just seems to be too high? This is where the percentage of income comes in. So let's say that your total income for the month of January is, let's see, that's 5,000. We'll say online sales. Let's just say that's another 4,500. And then booth rents, you receive, let's just say 7,500 for the month. So which means that for the month of January, your total income was $19,000. Okay. And then you have, let's say you have merchant fees. In merchant fees, you paid, I don't know, let's just say $950. All right. So that means that what this is telling you is that 12% of your total, 12% of your income, of your total income was spent on 5% up here. 5% of what you brought in, of your total income, was spent on merchant fees. You want to ask yourself the question, is that too much? If you think it is too much, then you want to start to now make plans to figure out how you can find possibly a different merchant, or how you can negotiate your fees, or whatever you need to bring that down. This is telling you that 12% of cost of goods sold, okay, you spent 12% of your total income on cost of goods sold. Is that good? Is it bad? Well, of course, with these numbers, it's not bad. But let's just say you paid employees $10,000, right? So now you're looking at your cost of goods sold, and your cost of goods sold is 60% of your total income. That's way too high. Now, when you look at how much you paid your employee, you paid your, let's say your commission employees, and it's $10,000. When you look at the $10,000 and you brought in 19,000, you see 10,000, that's a number. You see 19,000, that's a number. But to me, there's a much higher impact when you look at the percentage. looking at the 10,000, you say, okay, that's, it's kind of high. But when you look to say that 52% of what you brought in went to pay commission, you might think that's too high. And it may be too high. So then you can go back and look to say, what am I paying my employees? What am I paying my what am I paying my assistants? Am I paying them too much? Whether you are or you're not is besides the point. As we look at these numbers, the fact is that you can look at this and make decisions. You can start to do some research to say, okay, here is what I'm paying. Here's a percentage of this is the percentage of what I'm paying as it relates to my total income. Do I need to make some changes? Okay. And so on and so forth. If you go down, so all of the categories have that ability. So let's say miscellaneous supplies. Let's look at job tools. So let's say you spent $5,000 in job tools. It's telling you that 26% of what you brought in went to job supplies. That's high. So then you can dig in here and start to see what happened. People stealing from me because this seems high. I'm spending all this money. I shouldn't be spending 26%. Are my supplies walking out the door? Right. So you can look at this and you can make decisions based upon, the percentage of income effect. Right. So that is how you would use the profit and loss statement. The Google Sheet profit and loss statement. It's very simple. Like once again, I said it's not necessarily the most ideal option, but it's better than nothing. So if you find yourself in a position where you're not ready to move forward with a bookkeeping system, either because you're financially unable to, or because you just don't know what you want to purchase, but you want to maintain, and also you want to maintain your books or track your income and expenses, this is the perfect option. Also, if you did not maintain your books and you're trying to get your information together for your accountant, then this is another option. You could just use this to pull all of your income and expenses together and hand it to your accountant. And that way you don't have to hand them a bunch of bank statements. You can just pull everything and record them here. All right. So this is available. I'm gonna send all of you a copy of this after the webinar. And if you're interested, you can go ahead and download it. Okay, so at the end of the year, you can come over here to Consolidated and you can look to see exactly what you did. So at year end, you can look at your percentage of income and you can start drilling down to see, okay, so in 2022, here is how I did. And then you can look at all of this information and then you can start planning for 2023. All right, so next we're going to look at QuickBooks, some of the options that we have with QuickBooks. So how many of you here currently have, or how many of you here currently use QuickBooks Online? Put a 3 if you currently use QuickBooks Online. Put a 0 if you don't use QuickBooks Online or you don't use anything, no accounting software at all. So 3 is if you currently are using QuickBooks Online, and then 0 if you do not use QuickBooks Online. So I'm just waiting for someone to add. Let's see. So no one has responded yet. Okay, just hired a tax firm to start using it for me. Okay, so you just hired a tax firm to start using it for you. Okay, start using QuickBooks. All right, good. Which one did you purchase? Was it the Essentials or the Plus? Okay, 0. So I'm assuming that means, Carla, you don't use QuickBooks Online. Okay. Now, Sharice, did you purchase the Plus or the Essentials? Which one, or the Simple Start? Which one did you get? or you're not sure. Okay, so while you are typing, I am going to go ahead and get started explaining the different options you have. Okay, so QuickBooks Online comes in 4 different options. And then for number 5, we have QuickBooks Self-Employed. And it's down here by itself because it's a little bit different than QuickBooks Online. So before I even get started, let me just say that if you are the only individuals that can use self-employed are booth renters. Not booth renters. If you are a Schedule C, so if you file a 1040 Schedule C, so that means you're either a single member LLC or you are a self-employed. Okay, that is the only way that you can use QuickBooks Online Self-Employed. If you are a partnership, if you are a S corp, if you are a corporation, or if you are taxed as an S corporation, then you cannot use QuickBooks Self-Employed. It's not for you. All right, so you have 3 options or 4 options. I always forget about the advanced because the advanced is definitely not something that any of you would, none of you would fit into the category of using advanced. So we're going to stick with Simple Start, Essentials, and Plus. Now, Simple Start is very simple. And if you are the only person who needs access to your QuickBooks file, then you can go with a Simple Start option. And not only that, most stylists, I have to say, are okay over here with the Simple Start. You're okay over here with a Simple Start. The difference comes in if you go with the Essentials, it includes 3 users. So when we're comparing Simple Start to Essentials, 3 of the main differences are it includes 3 users. So therefore, if there is more than 1 user that has to have access to QuickBooks Online, then you would need to get the Essentials. Manage and pay bills. So managing and paying bills, most small businesses don't necessarily manage their bills in QuickBooks. Most of them are just cash-based. And what they do is, as the bills come in, they pay them. Now, if you want to manage your bills, meaning that managing your bills means that, let's say you own a salon and you pay an electric bill every single month. And your electric bill is due on the 15th of every month. But you receive your statement on the 1st of the month to let you know that on the 15th, your bill is due. So managing your bills would mean that, okay, so I've received my statement from the electric company on the 1st. It's due on the 15th, but I'm going to enter it into the system. That way it's in the system. And when it's due, I'm either going to pay it directly out of the system, or I'm going to make sure that I'm accounting for it. So every time, because especially if you're a large salon, when you have bills out there, let's say you have bills worth $5,000, but you also have other expenses that you need to pay immediately. If you're not managing your bills, if you're not putting those bills into the system before they're due, you might overspend, thinking that you have all this extra money, not realizing that in about 15 days, you have about $5,000 worth of expenses that need to be paid. So to manage your bills and to make sure that you don't spend money that you don't have, or to make sure that you're reminded that you're going to owe $5,000 on the 15th of the month, you enter that information into your bookkeeping system, so it's right there for you. Okay. Now, a lot of stylists, especially if you're independent and you're a booth renter, they don't really do that. They just, as the bills come in, they pay them. So if that's not a big deal to you, then you don't necessarily have to go with Essentials, right? Next thing is time tracking. If you're not tracking time, you have no reason to track time, you don't have to go with Essentials. You can just stick with the Simple Start. When it comes to the Plus, now there are some additions in Plus that make it worthwhile. Now, number 1, it includes 5 users. If you don't need more than 5 users, not necessary. Paying bills, same thing as Essentials. Tracking time, same things as essentials. Tracking inventory. If you have to track inventory and you're using QuickBooks Online to track your inventory, then you're going to have Plus. But from my experience, from people who sell, for the clients that I work with, they sell on Shopify or they sell on Amazon or wherever they sell, those software systems, through those software systems, you are able to track your inventory. I have clients that use Vagaro as their point of sale. Well, Vagaro also tracks inventory. Square also tracks inventory. So you don't necessarily have to track inventory in QuickBooks. And I always say, don't track inventory in two places. Track it in just one place. So if you're going to track it in QuickBooks, track it in QuickBooks. If you're going to track it in Vagaro or Square, track it there. It's easier to track it where you're, in Vagaro, because whenever you purchase things, everything, because it's your point of sale system, whenever you sell something, okay, Vagaro or Square will keep track of what you're selling. So, or even on Shopify, it keeps track of what you're selling. So a lot of times it's easier just to track it in the third-party software. And in that case, if you're doing that, then you don't need to use QuickBooks Online to track inventory. And then you have your tracking of your project's profitability, which really isn't something that beauty industry professionals have to worry about. This would be, let's say, for example, you flip houses, or you're in the real estate business and you have a project and you want to know exactly what you're spending for each project and what's coming in for each project. You will track it using the project profitability, which is not something I'm going to go deep into because it's not really necessary. Now, there is one thing that Plus has that I think is very important, and it's called classes. And what we use classes for is to track your different streams of income. Nowadays, if you don't, you should have more than one stream of income, right? So even as a beauty industry professional, so let's say you're a hairstylist. So you make money behind a chair. That's one stream of income. You also make money because you offer classes, whether it's online classes, whether it is in-person classes. That's another stream of income. You may be a social media influencer. That's another form of income. You might be an educator. That's another form of income. So if you have more than one source of income within the beauty industry profession, then you want to make sure you're tracking those separately. And the reason why you want to track those separately is because you always want to know where your money is coming in from, where most of your money is coming from. You want to know that, because if you combine everything and you don't keep track of the individual revenue streams, then what could happen is, let's say within a year or in that year, your total revenue was $100,000, right? And if you're not tracking things individually, you don't know whether or not one of your streams of income whether or not you actually lost. You have no idea because you weren't tracking it. So let's say you spent all of this money putting your classes together for 2022, but then you received income from those classes, but you wind up having a loss. It was a net loss when you combine what you got paid for the classes and what it cost you to put those classes on. It's a net loss. Well, you won't know that if you combine all of your income and expenses, because if you made a profit behind the chair of, let's say, 80,000 or 90,000, that is going to absorb your losses. So you're not going to know. If you are maintaining your books, your income separately, then you can tell where your money is coming from. So if you do have a loss within a particular revenue stream, then you can start to say, okay, should I keep doing this, or should I add? Should I try to, put money into advertising? Should I put my effort into this particular stream of revenue stream so I can boost up my income, my revenue, and minimize my expenses so I can actually make it profitable? Or should I just let it go? Right? You can't make that decision because you didn't even know you had a loss, because you have 4 revenue streams and all of them are combined. You're not tracking them one at a time. Therefore, you have no idea what you should be doing. So Plus has something called classes that will allow you to do this. Now, this was an advantage up until maybe about a year and a half ago, when QuickBooks came out with something called tags. Now, of course, tags is not necessarily as efficient when it comes to tracking different sources of income, but it works. It's good enough. It does the job. So because of that, now you no longer have to worry about spending $80 a month just so you can get classes. You can still come over here and spend $25 a month and use tags as a workaround for that. Okay. So that is just a brief idea of Simple Start Essentials and Plus, and understanding which one you should choose for your business. QuickBooks Self-Employed, I'm not too keen on QuickBooks Self-Employed. And the reason why I'm not too keen on QuickBooks Self-Employed is because it doesn't have a balance sheet. So if, for example, if you borrowed money, let's say you borrow money from, you get a loan, okay? Or you have equipment that you need to track on your balance sheet. You can't do that with QuickBooks Self-Employed. Okay, you can't do that with QuickBooks Self-Employed. So I don't really recommend it. Now let's jump into Self-Employed real quick so we can take a look at it, and then we'll jump into QuickBooks Online, take a quick look at it so you can see exactly what this stuff looks like. Okay, so this is QuickBooks Self-Employed, and this is pretty much what you get with QuickBooks Self-Employed. You will connect your bank account to QuickBooks Self-Employed, and all of your transactions are going to come in, right? They're all going to come in, and the good thing, one good thing about self-employed is that it allows you to categorize transactions as business, personal, or you can split them. So if you are one of those people who is commingling funds, which is not a good idea, and I think I've mentioned that before, that it's never a good idea to commingle funds, but people do what they want to do, right? So in that case, if you decide that, you know what, I don't care, I'm commingling, then at the very least, you can break things out. So if you look at something, let's say this says Aldi's, you can send it to, or let's go down here. Let's see, Kaiser. You can send that to personal. Okay, so it goes to personal. If something is, oh, okay, well, that's nice. That thing just went out on me. Let's try this again. Okay. All right, here we go. So let's go back to transactions. we're not going to discuss all the details of this, but I just want to give you an idea of how it works. So, so you can send stuff to business, send it to personal, or you can split it. If you split it, you say, okay, well, this is something that I use, like your cell phone. Okay, I use 50% for business, and I use 50% for personal. So I'm just going to split it here, and I'm going to send this amount to personal and this amount to business, and then you just save it. So now you have whatever percentage you want to go to personal, whatever percentage you want it to go to business. Everything that goes to business will show up on your profit and loss statement. Nothing that goes to personal shows up on your profit and loss statement. So this is pretty much how self-employed works. And then you can create rules. So the rule basically is saying, when you create the rule, let's say anything that comes in from Aldi's, if you ever see anything that comes in from Aldi's, I'm creating a rule to say, send it to personal, which means that there's nothing you have to do. So you're doing all of the hard bookkeeping work up front. You're doing it, you're front loading. You created all these rules. So now you know that every time something comes in from T-Mobile, you can create a rule to say, send half to personal and send half to business. If it comes in from LA Fitness, send it to personal. Right? So you set up those rules. So at the end of the month, when you come in to do your bookkeeping, the only thing you're going to have to do is whatever does not have a rule, that's the only thing you have to look at to figure out where I'm going to send it. Okay. Another good thing about QuickBooks Self-Employed, if you are a mobile stylist, then you can track your miles. You can track it on you can actually download this onto your cell phone, and you can just track your miles. You know, whenever you go somewhere, you can just turn it on and track your miles as you go. So that's one great thing about it. And of course, good thing is you can also use invoices with QuickBooks. This is not fairly new. It's been around for a while, but you can actually create invoices in QuickBooks Self-Employed and send them to clients to pay, if you need them to prepay for something, or if they need to pay for the service up front. And let's see. So yeah, so that's, and one other thing is estimated taxes. So if you use QuickBooks Self-Employed, if you set things up properly, and when I say properly, you have to set up your tax profile. You set up your tax profile, then it automatically calculates your estimated taxes for you. Federal, but not state. And usually federal is more important. I won't say it's more important, but once you know what you owe for the feds, then you can always easily figure out what you're going to owe for the state. So you can let's see. It calculates your estimated taxes, and when you come here, it will tell you what you need to pay depending upon what quarter we're in. So that's one good thing. You set this up and it's automatic. QuickBooks Online doesn't have this feature. However, that being said, recently I set up a QuickBooks Online account for a client of mine, and lo and behold, I saw where it said on the side, it said estimated taxes. And I was like, oh, wow, when did this happen? One thing about QuickBooks Online is that they're constantly adding, they're constantly changing stuff. So sometimes I wake up in the morning and I realize that something brand new just showed up. And I'm thinking to myself, okay, when did this happen? Right? And it makes me, something that makes me feel incompetent, because if I'm talking to a client and I don't even know that this feature exists, because it didn't exist last week, and they still, oh, I have this feature. And I say, no, QuickBooks doesn't have that feature. Oh yeah, it does, because I have it. I'm like, okay, well, that's interesting. So yeah, that's one of those things that showed up. But when I dug deeper into it, it wasn't really calculating. I wouldn't say properly, but it wasn't calculating in a way that was useful. So what I'm thinking is they're probably still building it out. Whereas for QuickBooks Self-Employed, they've pretty much built it out where you can, if you set up your personal profile properly, you can pretty much depend upon what the estimated tax tells you that you owe. Okay, so let's look at QuickBooks Online real quick. Let's look at QuickBooks Online. Okay, so here is QuickBooks Online. And let me see if I can show you what I was talking about when it came to tagging. So let's see, reports. We're going to try to pull a profit on, oh gosh, okay. All right, so we're going to have to try this. Let me get out of here. Let's see. Okay, so Cherise, they actually use a different tax service. I'm not familiar with it just yet. So when you say a tax service, are you talking about, so this is bookkeeping, accounting. So when you say tax service, or you say they're doing your bookkeeping for you, you're not sure what bookkeeping system they're using, because tax is totally different. So I'm not quite sure what you mean when you say they use a different tax service. Are you meaning that they use a different bookkeeping system, which is not QuickBooks, to prepare your financial statements? Is that what you're saying? So you can go ahead and answer me, Cherise, whenever you get a chance. All right, so let me go back here. Okay, a bookkeeping program. All right, okay. But that's fine. I mean, as long as they are doing your bookkeeping, it doesn't really matter what they use, as long as they're doing it and they're doing a good job. One good thing about QuickBooks Online is that it works great for, it's pretty, I won't say simple, but it's easier to navigate, and it's very readily available for individuals who want to DIY, who want to do their own bookkeeping. So, and it's easy for us to access as accountants. If I'm working with a client, it's easy for me to access their books. All right, so let me see if I can pull up the tagging reports. profit and loss by tag group. See if I can remember how to do this. Let's see. We're going to go to. Let's go to. Let's run that. This is on the fly. I'm not sure if I can even remember how to. Revenue streams. Let's run reports. Let's go to. You go up here to all dates. Yeah, I'm trying to figure out what dates I have. Let's see, revenue streams. Yeah, I may have to come back to this. I don't want to waste too much time on this. But anyway, so this is QuickBooks Online. And does anybody have any questions? Okay. I enjoy learning. Okay, you said you enjoy learning the ins and outs. Okay, well, that's good because that's important. Like I always tell people, you don't have to be a bookkeeper, nor do you have to, but you do want to understand how things work because you want to make sure that, or you want to at least have a good idea that whoever is doing the work for you is on the right track. Because if you're completely clueless, then you don't really know what's going on. So if you have a good understanding, you can ask questions. Okay, when you have no idea what's going on, you don't really know what to ask, whatever they give you, just accept it. It may be right, it may not be. So it's always a good idea to have an idea of how all of this works. Does anyone have any questions so far? Okay, so, all right, so QuickBooks Online. Now, there's really not too much that I can get into in this short period of time. But I will say that, let's see, let's go to the overview board. Let's go to banking. One of the great features with QuickBooks Online is their banking center. Okay, so when you connect all of your bank accounts and your credit card accounts to QuickBooks Online, everything comes in automatically. And what's so great about this is that you can create rules for all of these transactions that you see. And it simplifies, this is what makes your bookkeeping extremely simple, is that if everything is set up properly and your rules are properly set up, then it sort of automates the whole process for you. So rather than spending 2-3 hours categorizing your transactions, if you set up rules in the very beginning, then all you have to do is come in, look at your rules. For example, here's a rule. It's saying it's AT&T, so this is going to go to utilities. Let's say Netflix, you set this up. Let's say you use it as a streaming service in your salon, so it's for business purposes. You'll set up a rule for Netflix. So anytime something comes in for Netflix, for AT&T, for Sprint, you set up these rules. They're going to automatically go where they're supposed to go. So at the end of the month, when you're doing your bookkeeping, it makes things extremely simple. All you have to do is, let's say we had, okay, let me categorize. Let's see, we have, this is taking forever. I'm not sure why it's taking so long. Okay, so we have all of these rules that have been set up already, right? So these rules have been set up. So what you would then do is, oh, Jesus, okay, what happened? Where did those rules go? Let's try this again. Let me categorize or match. Really what I'm trying to show you is how you can quickly get this information into QuickBooks. Okay, so you have all of your rules, right? So all these rules have been set up in the beginning. So then when you come in at the end of the month, all you have to do is you're going to click on right here on the first one that has the rule that you want. You're going to scroll down to where the rules end, because you know all of these are correct. So you hold down the shift key, you click on this box, and then you just accept it. So now all these transactions are going to go straight into your books. And anything that doesn't have a rule, this is when you're going to start to categorize them. And there are other ways to automate these as well, but we're not going to get into that. I'm just sort of trying to just give you an idea of how this works. So if you ever thought about doing your own bookkeeping, it's not, here's what I'll say. I wouldn't say that bookkeeping is easy, because you do have to understand accounting in order to know certain things, right? But when it comes to just a simple data entry, the data entry portion of it, and if that's all you're doing, and you're not trying to figure out issues, because if something goes wrong, you're not really going to understand how to fix it, because you don't have an accounting background. But if your books are properly set up, and with a day or two's worth of training, you can learn how to properly categorize your transactions. And that will save you from having to, pay an accountant to do it for you. Of course, the number one thing is to pay someone to do it, right? Because you're taking it off your plate, and they're an expert. But if you can't afford it, but you still want to maintain your books, well, there are other options, DIY. Now, I do have a QuickBooks online course tutorial. It's about maybe 45 different, it's very, very in depth. And what it does is it pretty much shows you how to use QuickBooks Online from beginning to end. How to use QuickBooks Online, how to set things up, how to read your reports, how to add transactions, how to break things out by cost of goods sold and regular expenses. It goes into detail with everything. Now, that particular course, I launched it a few months ago. If you're attending this the normal price for the course is $497, but if you're attending this webinar, you get 60% off. So you're only going to be paying $198, and it's a lifetime price. Now, with that, you get 6 months of access to myself, where if you ever have any questions on how to do something, how to set things up, once or twice a month, I meet with all of my students, and I help them to fix or figure out whatever they have questions about. Okay, so you get 6 months worth of that. But so that's for anybody who is interested in learning how to do things themselves, setting up their own books, and getting it done on their own. And it's worth it, because ordinarily you would pay for bookkeeping services, depending upon who you go to. It can range from $300 if you go cheap, up to about $1,500. It all depends upon who you're hiring. But if you want to have a good understanding of how this works before you farm it out, then it will be a good idea. I think it's a good idea to do a DIY, do it yourself, or DIY rather. And then when you've reached a certain level in your business where you can now afford to farm it out, you can do that, but then you have a good idea of how things work because you did it yourself for a while. Okay, so that's all I have for today. Let's see, are there any questions? Let me see. All right. Okay, so Quicken, man, that is so old. Honestly, I used to use Quicken back in the 90s, which probably some of you weren't even born then. Back in the 90s, I haven't looked at it in almost 15, 20 years. So I don't really know. And I'm quite sure things possibly have been changed and updated, but I don't even know, do they have a bookkeeping system, or is Quicken now more for personal finances? Can you, Cherise, if you can answer that question? Because I don't even know if they have a bookkeeping system at this point. So are there any questions before I let you guys go? And I know there's a short delay. Let me stop sharing. Oh, okay. All right. Yeah, so hopefully you learned something today. And I know it's nothing exciting about these webinars. No, I get it, really. Unless you really like to like Cherise said, she enjoys learning the ins and outs, which is good. But I understand that this stuff can be quite dense and not that enjoyable. it's just a necessity. So I truly do understand that. And sometimes that makes it challenging for me to share the information, because I'm always afraid people are just going to fall asleep while I'm talking, because they're saying to themselves, "Oh my God, I really don't want to be here," you know. But I do appreciate you guys hanging in there for the hour. Okay, so I believe personal. Okay, yeah, and that's what I was thinking. I was thinking that Quicken changed to more personal, if I'm not mistaken. But yeah, I don't really know much about Quicken. I haven't, like I said, I haven't looked at it in years. So okay, so if there are no questions, I am going to shut it down for today. And next week is going to be our final week, and we will be talking about, let's see, let me pull up what we're going to be talking about next week. You're welcome, Cherise. So next week we will be, let's see, go to the landing page and take a look. All right, so next week we're going to be talking about, all right, so yeah, I think I'm going to be talking about 3 simple things that you can do in your business to make sure that you're not missing out on money. Let's put it that way. And these things are really simple. They're things that you can implement day one. So after I discuss them with you next week, you can actually start to implement them immediately. So we'll be talking about that next week. And then also, what is the best method to determine how much I should be charging for a service? I'm going to be talking about that, because I get a lot of, I won't say I get, but usually when I'm in these social media groups, there's so many questions about how much should I charge? Am I charging my worth? You're asking people, like you might live in a small town in Alabama, asking somebody in California whether or not you're charging enough. Well, they really can't answer that question, because you guys live in totally different regions. And then the question is, am I charging my worth? That's such an arbitrary question, because your worth to you may not be, other people may not see that. Okay, so you may think that you're worth $1,000. Well, you're only worth what someone's willing to pay you. Simple as that. So you have to come up with a different method and strategy to determine how much to charge for your services. It has to be more than what you think you're worth or what someone on social media told you. You know, that you have to have a plan and a strategy. That way you can scale. Because if you have a plan and strategy when it comes to pricing your services, it's easier for you to then scale that and to grow that. But if it's all based upon emotion, or it's based upon what you think you're worth, then that's difficult to scale, because you might think you're worth $1,000 this month. Next month, your self-esteem for some reason may be shot, and that happens to all of us. It happens to me, God knows, where you just start to feel you're like an imposter. Are you going to lower your price because all of a sudden you think you're worth less? So yeah, there has to be other ways to figure that out, and we're going to talk about that next week. Okay, so those are the 2 things we'll talk about next week, and that will be our final meeting. I try to help beauty industry professionals transform their financial life. And not just transforming their financial life from a business perspective, but also transforming their financial life from a personal perspective. Because at the end of the day, you know, what we do for a living is what helps us elevate our personal lives, right? It helps us to save for retirement. It helps us to purchase vehicles. It helps us to purchase homes. It just helps us to go on vacation. Everything that we do in our business lives helps better our personal lives.